This video was brought to you in part by SD Bullion.
While some online bullion dealers continue to charge $4 over spot for U.S. Mint Silver Eagles, SD Bullion is selling 2016 Silver Eagles for just $2.29 over spot for any quantity. Again, that's just $2.29 over spot for any quantity. If you haven't joined over 25,000 new customers by making the switch to SD Bullion, what are you waiting for? You could save hundreds or even thousands of dollars on your next order. SD Bullion, the lowest prices, period.
Hey everyone, this is Elijah Johnson with financeandliberty.com, and back with us today is Bill Murphy from gata.org and also lametropolecafe.com. Bill, thank you so much for joining us today.
Oh, thanks for having me, AJ. Great to be here.
All right. Well, I'd first like to discuss just basically if you could give us an update on the gold and silver market.
Well, as everybody knows, people that follow you, I'm sure, do. You know, they were just been slaughtered since last Friday, started last Friday, and this is what the gold cartel does that God has been up against for the last 18 years or so, and they just set up a move to break down the gold and silver markets from established bases formed for many months, and they just crushed the thing, and they went at it, hitting the market with thousands of contracts. And it just was a horrendous week, and but this is what we're used to it. This is what they do, and people don't ever seem to want to talk about it. But here it's happened again, just coincidentally, a week or a month ahead of the election, and of course when the Chinese took the week off, and it was a great opportunity for them, and they took care of it.
Now, you said coincidentally ahead of the election. Do you think there could be a connection there?
Well, I just speak for myself, but the establishment, wants Hillary Clinton, and both on the Republican and Democrat, and they're going to do everything they can to keep the moneyed interest, to keep them in power, to keep the establishment under control, and of course she just does everything that they want done, and is their person. So it's it may be a coincidence, maybe not, but it's no surprise that about a month ahead of time, when most people are making our minds that it's getting taken down sharply. And, of course, the Dow just sits around 18,200, above that 18,000 key mark of psychological level. And, they want everything to be copacetic, when people start voting in another month. And they've got their way, whether it's a fluke or not.
Now, I know last time we had you on, you were predicting that silver was going to go to $50 pretty soon, you said. Is that your position? Because I know you were saying that once it breaks through about, I think, 2150, then it could jump to 50 very quickly. But now that we've seen a pullback, what is your perspective on, do you think it's still going to go to 50 pretty soon, or has that been delayed?
Well, pretty soon is a tough one, and you can have egg on your face on that one. This is what we're up against, J.P. Morgan in the crowd taking the silver price down, and that hasn't worked out yet at all. I mean, they took the open interest to all-time high grounds, close to 225,000 contracts, and have just eviscerating the specs longs, and quite frankly, I think they're turning a lot short now. So I do think when it breaks, for me, the number is 21, it's going to explode. And yes, we're going to 50 and then 100, but has that been put off? Absolutely. They just came back and did what they do once again, and, good grief, we had a 16 handle briefly on Friday. So they're there, and again, this is what they do, and there's no reason for silver to be down at this pitiful level, but that's where it is, and we have to deal with it.
Now, you were mentioning about J.P. Morgan. I guess, did you want to give us an update on the gold cartels and J.P. Morgan's short position in the silver market?
Well, they're in the process of covering now. They said the old open interest high in silver a few years ago was about 192,000. They took it up to close to 225 as the specs and were pouring in, hopefully to take it to the levels I was talking about. And they said no way, and calculated their attack. I mean, even a week ago Friday, silver was approaching to 20, went straight up 60 cents. A huge amount of buying came in, and they took the market straight down again. We've seen that for years, and unfortunately, that hasn't changed. And, J.P. Morgan has orchestrated the whole thing, and they're in the process of covering now. They fleeced the specs longs once again. It's worked, and one day it's going to blow up on them, but it won't be until the physical market makes it impossible for them to get away with what they just did again. and yet, here it is. We're $17.50 silver.
Definitely, and I think when we focus on the day-to-day moves and what the day-to-day moves of what the gold cartel is doing, we might lose sight of the big picture. Did you want to remind our viewers really what the big picture is in this and where we're headed?
Sure. Well, I think this is one of the key points for people to pay attention to what Gada has to say and what we've uncovered all these years. And these are artificially low prices. If gold had kept up with inflation, it would be at least double what it is today, more than that. And for silver to be at this, lowly level after all these years is really something else. And just my opinion, but the bad guys, the gold cartel and Morgan, are going through as much physical silver as possible, what's left out there, and at some point they're going to hit the tipping point, hit the wall, and when it goes, and 1850 was the first stop, but 21 was the real key, and they stopped it. They stopped it there, and I think once it gets through that level, the next time will give us a clue that they are starting to finally lose control, and the market actions to the upside ought to be extremely volatile and dramatic, but. We got close to it a few months ago, and now we're starting all over again. So I think for those who have the patience to stick with it, the fortunes are going to be made. And yes, when silver gets to 50, it ought to go to 100. I think the move this time will be quick. Be quick. You're not going to have a managed retreat like we saw in the first decade of the century in terms of the precious metals. It'll be much more like silver was in 2011, the end of 2010, and which shot up 50 from 16. Except this time, I think it's going to be even more violent.
Now, besides the precious metal markets, one of the other things I wanted to discuss today was about Deutsche Bank. Now, I've been talking with other guests on my channel about how it seems like Deutsche Bank might be basically on the verge of collapse. Do you think this will happen? And if it does, what impact do you think that would have on the global economy? Some people are saying that it'll be the next Lehman event.
Well, the people who are saying that are correct, and it would be a big, big deal, which is why the establishment's going to move heaven and earth through everything they can to prevent that from happening. We went through similar kind of talk about Deutsche Bank 6 months ago, and what they're able to do is kick the can. That's Robert Rubin's philosophy down the road, and they, with use of however they're doing it, derivatives or whatever, or fooling around with the numbers, they're able to delay events like Deutsche Bank affecting the entire market. But is it a very serious issue, and could it be another Lehman Brothers? Absolutely. The question is, how long can they get away with this, making it a non-event? I mean, everyone gets all hot and bothered, and then it goes away for 6 months. One of these things, like Deutsche Bank, one of these black swan events, I guess Deutsche Bank wouldn't be black swan anymore. It's going to happen out of nowhere, and it's going to really affect the system, sort of like Brexit did. I mean, that surprised the establishment, and look what happened. It was the only time I've seen gold react to anything and have it hold for a little bit. Went up $100 because they got caught off guard. And in the sense of when something is known like Deutsche Bank, they've had plenty of time to do what they can to make sure it doesn't become the issue that so many of the smart people in our camp think it's going to be.
All right. Well, Bill Murphy, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Yeah, Chris Powell, my colleague, does a great job with Gada. They can sign up on our list at gada.org, and people can come to my website, the Metropole Cafe, for a 2-week free trial and see if it's of value to them. And thanks very much for having me.
All right. Once again, thank you so much for your time.
Thanks, EJ.
This video was brought to you in part by ReluctantPreppers.com. Click here to watch Reluctant Prepper's latest interview. Europe's largest bank, Deutsche Bank, is on the ropes, and Germany is vowing not to bail it out. Like the Lehman 2008 collapse, will Deutsche Bank's derivative web pull down the rest of Europe and the world's banking system with it? Proprietary precious metals and market analyst Rob Kirby also weighs in on which nations have accumulated the critical mass of gold to emerge as global leaders after the looming crisis. Kirby updates his views on the U.S. presidential race and what it reveals about the epic struggle of globalist powers versus the sovereignty of nations unfolding before our eyes.